Hi, my name is Todd Aiken, and in my channel, Unconventional Wealth Ideas, we're breaking the chains of a 9 to 5 so we can live financially free out of our brokerage accounts using the power of dividends through the stock market. If you're interested in doing the same, email me for my e-guides at aikentod48@gmail.com. And if you like the video, click like or subscribe down below. I'd really appreciate it. Thanks a lot. In today's video, we're going to be doing a review on Yieldmax, Defiance funds, and Cornerstone funds now that we have more data compiled to make an informed decision on our dividend investments, which helps us earn over $100K per year in income and live financially free out of our brokerage accounts. Dividends are the way to get ahead in the stock market. Trading gains aren't accepted by banks. Only dividends or pay stubs are accepted by banks to level up and live financially free out of your brokerage account. The first fund we're going to be discussing today is Cornerstone. See, my performance and value now, it shows that we're only up 25% for the year. We were up 50%, okay? A few months ago, we were at 50%. Now we're up 25. We're still beating the S&P, but even just a few days ago, I was up about 29%. So I think this drop off is just a coincidence because we just had our X date in Cornerstone, so that dropped the account by the equivalent amount of our dividends, which are about 8K per month from Cornerstone alone. So that dropped my account by that amount. Plus my options are being mispriced right now because of the volatility in the market. If you look down, for example, at my IEP option, sorry for scrolling fast, I'm on my phone. I'm out here traveling the world, living free, and I'm not going to treat YouTube as a job. So I just record whenever I can on my phone. Here's IEP. If you look at the put on IEP, I just sold 3 puts there. So $20 minus 4 is 16. The current market price of IEP is around 18. So this isn't even a true loss. Sometimes options premiums get a bit wonky when the market is experiencing volatility. Okay, so I collected my premiums. That's not going to change, but these numbers sometimes, these days gains can be distorted when you're using options. So I think that's why my performance is, sorry for the scroll. I'm sorry for scrolling fast. Let me show you my margin really fast. But that's why my performance is struggling right now. I mean, we're still beating the S&P. We're still doing great. But my performance shows 25% there. Again, the X date from Cornerstone and the options, I think, are the culprit to blame there. Okay, now let me scroll back up to the top and show you something. So we're talking about 3 funds here: Cornerstone, Defiance, and Yieldmax. Now, here's the thing about Cornerstone. Okay, what do we know now as we've had a week go by here? What do we know about the performance of Cornerstone? Well, no one has a crystal ball. So any questions on why the fund is down is an exercise in futility, in my opinion. Any question on why anything is down in the stock market is an exercise in futility. No one has a crystal ball. The only thing that I'm worried about is being indexed, which even when we were down on Friday 1.29%, the market, as you can see above, was down 1.23%, the NASDAQ. So we're still in line with the indexes. And I think that Cornerstone was just down. I said this in the last video. Cornerstone was just down because it's having its dividend be reset at the end of October, because every year they reset their 20% dividend during the month of October. So we could see a slight dividend cut because of the performance in the market lately, and it's going to be a meaningless cut to me. It's going to be almost negligible in my opinion. But whatever it is, okay, 5-star fund Cornerstone is, and it beats the indexes, and it's been around for decades. So that's all you need to know. It'll eventually, catch up to where it's supposed to be going, okay, because it usually always beats the indexes, as you can see in that graphic. I mean, the numbers don't lie. The math doesn't lie. So 90% of our questions are eliminated just by indexing our investments to something like Cornerstone, because Cornerstone, again, is the index. Okay, so the only thing we can control with Cornerstone is the special drip. Okay, you can ask for the special drip. All right, see Cornerstone, this is why it's so special. The market price, 762, it drips its 21% dividend down at the NAV every month. Okay, so when you see my screen reload, I'll show it to you. Okay, 762 is the market price, but look down here, 649, That's a 17% gain, 676, 12% gain. Just a few weeks ago, these were monster gains. They were 28% gains. I was up thousands of dollars in each of these lots. 691, 10% gain. So Cornerstone has really pulled back, okay? But it doesn't matter, okay? It's just doing what it always does every October when there's a dividend cut being priced in. And again, I don't really care about what anything is doing in my account as long as I'm staying close to the indexes. Yes, I want to beat the indexes, but as long as I'm close to the indexes, well, then we're living financially free. We're traveling the world doing whatever we want because we live out of this available withdrawal number. Okay, this is the key to living free is your equity and maintenance. See, Cornerstone. The second thing we could control with Cornerstone is how much we buy of it, and the maintenance on it is 30%. If you need help understanding maintenance, that's in my margin e-guide, okay? I have 4 e-guides. Volume 1, fundamental analysis. Volume 2, technical analysis. Volume 3 is how to use margin to live financially free out of a brokerage account. And volume 4 is how to play Cornerstone properly. Now, Cornerstone, as you can see here, snapshot, view, margin, maintenance requirement, 30%. So this is the secret to living freely in your account. You don't have to even have much money in your account. You can be down thousands of dollars in one day. It doesn't matter as long as you're following the indexes. Then you're living freely, and as long as that was the first point I make. But it also, as long as your maintenance is low, then even if you're losing, okay, your available withdrawal remains high. Okay, so you have to understand the power of maintenance. Okay, and again, I write all about that in my margin e-guide. Okay. Also, if you want that special drip for Cornerstone, you have to ask for it. You have to call your broker, and it depends on the broker, but you have to ask for it. Now you can select the special drip yourself. That I hear, but we've been having some problems. Many clients on Discord have been complaining that they're still not getting their drip. So you have to call your broker and make sure that they have you enrolled in it. They messed me up once and didn't have my drip on. So you have to call and confirm that the special drip is on. That's what you can control. You can also control the rights offering in Cornerstone, which all you do is wait for the announcement in Cornerstone for the rights offering. And I'm not even worried about that either because we have Discord here. We have almost 500 members in the Discord chat room that are watching the rights offering closer than me. If you go to the Cornerstone discussion section, you'll see there's nothing but comments here on what's happening with Cornerstone being updated daily. All the news on Cornerstone, it's just constantly being updated here in Discord. And we have many other resources here in Discord, by the way, if you're ever interested. Discord access comes free for life when you buy my e-guides. Also, my phone number comes free for life when you buy my e-guides. So please keep that in mind. Okay, so we don't care what's happening in the market as long as we're staying close to the indexes and as long as our maintenance is low, which keeps our available withdrawal high. I can swipe my E-Trade card and do whatever I want. I can travel the world, buy cars, clothes, shoes, hotel rooms, whatever I want. If I spend $200 on a hotel room, this available withdrawal goes down by 200. Big deal. My margin purchasing power, which was almost $1 million not too long ago, would fall by 1 times 4. It would fall if I took out $100. My purchasing power would fall by about $400. And so I still have 865,000 left to buy. I can raise my income anytime I want. My estimated income of 150,000, that's nothing. I could raise that up to 200,000, 300,000, but I'm trying to be responsible. You have to keep your earnings stable. You can't just you can't go crazy and just margin yourself to the hilt and get more income because then that takes up your available withdrawal. So you have to use just a fraction of your margin to get ahead. My 150,000 in dividends will pay back this margin debt in less than 2 years. This doesn't show up on a credit check to banks. You can click sell at any time. That's why margin is the best gift that I've ever been given out of my brokerage account. And all of you have this ability too. When you put your money in a brokerage account, for every $1 you put in, you get $4 purchasing power. Okay. You just have to ask for pattern day trading status. So this is another thing you can control. So do you see where I'm going with this? I mean, you don't worry about what is happening in the market, okay? You just worry about your maintenance levels and your betas, your swings. So if you bought too much of any fund and you raise your income to 200,000, let's say, not only does it take away your available withdrawal, but also when you have a big market pullback, you're going to see a bigger fluctuation in your account. So you have to really control how much margin you're using as a percentage of your net account value. Okay, so All of that again is in my margin e-guide if you ever need help understanding how I use margin. So we all know that Cornerstone's a 5-star fund. It's been established for decades. They'll still follow the indexes over time. So when they don't, that could be on an ex dividend date, or let's say the month of October, when they don't follow the indexes exactly, don't freak out. It's all math. Okay, you need to learn about the math and the metrics to Cornerstone before freaking out. Okay, when the dividend is such, let's say it's a 20%, and we have a drop on the X date, it's just math. Okay, when they're resetting the dividend at the end of the month, it's just math based on what the indexes are doing. Okay, so you can calculate all this. And on Discord, we have a guy. Well, he's not on Discord, but we share his comments all the time. Clint56, a guy who I've shared with you many times. He taught me about Cornerstone personally. He gives you all those metrics and the math breakdown. If you're ever interested, go check that out on Discord, or you can go see him on Seeking Alpha, but that costs money. Discord's free when you buy my e-guides. So let's go ahead and get into the second fund. Okay, Defiance funds. I'll try to be brief here. Defiance funds, I'm really liking Defiance, JEPY and QQQY, because they have huge dividends. I mean, 50% dividends right now. And look, I mean, they outperformed the market once again. The market was down big on Friday, and these barely budged. And we're making a nice little comeback in our Defiance funds. We were down 1,000 in each after their dividend, because they have a huge dividend. It's going to drop by the amount of that dividend. Once again, that's just math. But everything else with the Defiance funds, we don't know. It's 0 DTE, 0 days to expiration. That's their technique to getting these dividends off of options. And we don't know how that's going to play out. But so far, so good. Now, the problem with Defiance funds is that they're 50% maintenance. Okay, so let's say there was some surprise with Defiance, and they didn't work out, which again, they seem to be working perfectly. 56% dividend, as you can see there. If they don't work out, then we're going to blow up our account. Okay, we can't have that. 50% maintenance. See that? That means for every 100,000 I put in Defiance, 50 grand of my money is taken up. I already have 50 grand in Defiance, so 25K of my equity is taken up. So that's kind of a problem. That's why I can't put too much in Defiance. A, because of the maintenance, and B, because we don't really know how their strategy is going to work long term. So I still keep a small amount in Defiance. Before I go, much bigger into this fund, because in these two funds, because I really do want more Defiance. I mean, I'm always going to keep Cornerstone. Why? Because it is the best, but also because it's low maintenance. Okay, I don't care. You guys need to get this through your head. The only thing that matters is low maintenance and index performance. If Cornerstone is going down some, shouldn't freak out that it's down 1% or 2%. I mean, stocks can fall 4 to 5% in a day. So if I'm down 1% in a day, even 2% in a day, it doesn't bother me one bit. Okay, because look, my available withdrawal remains high. Now, if we're down 3%, when the market's down 1%, and this is happening consistently, well, then we need to look at what's in our holdings. And I'll guarantee you that it's something that's not index related. You're going to have too many stocks in there or something. So I tie all my investments to the indexes, so I don't have to worry about anything. All the guessing work is gone. All the headline risk is gone. So also, if we fall 20% in the market, 20% dividends from Cornerstone, or 50% dividends from Defiance, will more than break us even, or more than offset those losses. So I'm not worried about a market decline on a day-to-day basis. Days gains in performance is just icing on the cake. Same for the special drip for Cornerstone. All that I care about are my dividends and maintenance levels, because the dividends qualify as income to banks, so I can really level up and get ahead. Okay, so if this dividend number is not changing and it's staying the same, this is all that I care about. Once again, okay, because it's going to pay down my margin. Even if the market's going up or down, my system remains uninterrupted. Okay, so if the dividends are the same and the maintenance is low, what do you have to fear, guys? I mean, you can't fear the market. Okay, the market averages 7% per year over time. Okay, and it's just, you can't beat the S&P over time. Statistically, everyone loses when they try to beat the S&P themselves. You can't do it. So you have to just buy the S&P, which is what I'm doing. So everything is indexed. Defiance funds are indexed. JEPY is the S&P. QQQY is the NASDAQ. And then Yieldmax. That's the last set of this is the last fund manager we're going to discuss here. Yieldmax. They're also 50% maintenance, but many of them are stock related. Now, Now, they are the largest parts of the indexes, and that's why I like Yieldmax funds. But look, they've been really taking a beating lately. And so I'm glad that I only have a small amount in these funds so that they don't take me down on a daily basis too much. Okay, so what do we know about Yieldmax funds? They fall by the amount that the stock falls, which we already knew, but won't rise by that same amount because their upside is capped. Same for Defiance funds, their upside is capped. Okay, but Cornerstone doesn't have capped upside. You get 30% premiums on average with Cornerstone. Plus you get the 20% dividend, plus you get that special drip. So, I mean, everything is going according to plan, and these funds have been working out well. Even the Yieldmax funds have been doing quite well for us when you factor back in dividends. It's just been a rough month in the market, so naturally these positions are down. I'm not worried about that one bit. I'm not worried about Cornerstone because of its proven history over time. I'm not worried about Defiance funds right now because I only have 50K in it. That's the last thing you can control, guys, okay, is your position size. All right, position size is everything. So you keep maintenance low, available for withdrawal high, and then you watch your position sizes, okay? You don't just drop, you know, 100K in Tesla because it has a nice dividend. Okay, Tesla could fall by the amount of the stock. Tesla could fall 10% in a day. If you keep 100 grand in that just for the sexy dividend, well, you could blow up your account in one day. Even if Tesla doesn't blow up, you could blow up because it's all about managing fluctuations in your account. All right, so again, as long as I'm anywhere close, as long as I'm in the ballpark of the indexes, I don't care what's happening in the market. I'm agnostic to price changes. There should be zero emotion happening when you're investing in stocks, okay? So I think this is going to have to wrap up the video because I don't want to go too long in the tooth here. I mean, look, Cornerstone, once again, not worried about it. What do we learn? Yeah, this month it's been down because the market's been down. Also, they're probably going to reset their dividend like they do every year. So there's nothing out of the ordinary happening here with Cornerstone. With Defiance funds, what did we learn? Excuse me, we learned that they've been performing very well, but they have high maintenance and they're unproven. So you can't just drop all your money in that. You have to manage your position sizes accordingly for Defiance funds. Okay. Yieldmax, you definitely have to watch your position sizes, and they have 50% maintenance. And so they've been doing well for us over the past few months, but they're just down because the market's down, in my opinion. And again, you deal with that by managing position sizes because they're stock related. Stocks have much bigger beta or movement than the indexes. So that's why I have 500 grand in Cornerstone up top, 50 grand in Defiance funds, even OARC. I have 20K in that because it's indexed almost for our Russell exposure, small cap exposure. Even Clip, this is indexed to Chinese internet companies, so you have a little bit more safety there. That's why I have 10K in them versus all the other funds that you see below that are either risky or stock specific. So I have triples, TQQQ, that's risky, so I keep 4K in it. And then you have, let's say, a Netflix, I only keep 2K in that. Facebook, 16. So you see what I'm doing here. You just manage all your position sizes, keep them small for the stocks, then you eliminate downside, drawdown. You eliminate the wide drawdowns, and you just continue to live financially free out of your brokerage account. There's nothing stopping you from just traveling the world or, again, just doing whatever you want. Now, if you go buy a car or do something stupid and spend your precious, equity in your account, then you could hurt yourself and potentially shoot yourself in the foot and derail your plans to be financially free. I'm always staying conservative. I don't spend much. I'm not into material things much, and I don't worry about taking too much equity out of my account. I'm not going to siphon equity out of there much if I'm just buying small things. Like when I'm out here traveling the world and when I'm in Paris, well, I've just been buying small meals, just been buying the major necessities to get us by. Because what makes me happy is just being with my family out here, playing basketball, going to the parks, whatever, not buying, cars or nice clothes or something like that. I understand a nice purchase every now and then, but you just don't go crazy with your expenditures. So yeah, that'll do it for the video, guys. If you need any help doing what I'm doing in my account, email me for my e-guides at akintosh48@gmail.com. Again, when you buy my e-guides, you get free access to Discord and my phone number for life. We have almost 500 members in there who can, testify to, the success that they're having from these investments and using margin. And they can also help you if you ever have a question. And you can call me if you need anything. But if I can't answer your question for some reason, like maybe you have a specific brokerage need, well then we have a brokerage channel on Discord where it's called Brokerage Specifics. You can find out all the specific information you need on your brokerage to get the special drip for Cornerstone or to manage the maintenance in your funds. Because again, that's all that matters is the maintenance, the index exposure, and your position sizes. Okay. And I think I gave you ample updates on what these other funds have been doing. Defiance doing great. uh, Cornerstone, it's still doing great. It's just business as usual. It's just an off month for it in the market. And then Yieldmax funds, they're doing fine as well. So we're learning that they're working. Just manage your position sizes, manage your maintenance levels, and don't try to stack your income. Don't try to just go for too much income right off the bat, especially in a dicey market. Scale up slowly and safely when you're using margin. Okay, so if you like the video, guys, click like down below, hit the like button or subscribe to my channel if you haven't already, and I'll talk to you soon, guys. Thanks.